Welcome to the Deerwood Realty Show. I'm John Shank, founder and managing broker of Deerwood Realty in St. Louis, Missouri. Well, it's been a while. I apologize for that, but let's get into it today. We've got this issue, this overarching issue in the housing market, the lock-in effect. Do you know what the lock-in effect is? It's this idea that because people bought houses, with a 2 to 3% mortgage rate, they're not going to go and buy a new house, which I do agree with in some ways, but I don't agree with it as much as I think that affordability is the problem. And the affordability problem has become an issue because of inflation. So inflation to me is what's causing these issues, not the mortgage rate lock-in effect. And just as an example, if houses are up 40% over the past two to 4 years, even on the crappy houses, I mean, that should tell you that there's something structurally wrong economically and that something should happen in the future. But anyway, let's get into the lock-in effect. Boy, can I sell it tonight. Here we go. It's from the New York Post. It says, housing market won't come unstuck until 2026. Economists predict. Here's why. Now, look, I don't feel this way. I don't think this way. And I'll try to give you the reasons as we go along why I think differently. It says, with the U.S. market will not come unstuck until at least 2026, and home affordability won't improve without a recession, a team of Wall Street economists predicted. Well, I don't know. I think houses will be available. I think that there is an issue with supply. I do believe short-term rentals are causing havoc in the marketplace. So I think that that's going to be something where I think legislation over time is probably going to slow that down. And then as far as home affordability not improving without a recession, be careful what you wish for, I guess, is what I would say. I mean, it sure does, everything sure does point to that direction, but I keep being told that we're going to have a soft landing and that everything's fine. It says, after a surge in housing market activity during the flu, I have to say the flu because YouTube is very particular in words that it uses and will just totally derank my video. Some of the other places I'll be fine, but I just use the flu. It has since retreated and stabilized. Well, has the housing market really retreated and stabilized? I mean, we're at record low transactions now. We got massive National Association of Realtors settlement coming up, which was just postponed. The forms were postponed for us for another 3 weeks just now, today. Would you say it's stabilized, though? I certainly wouldn't. People are having difficulty finding a home. People are having difficulty finding a mortgage. So I don't think that this is stable. This is definitely not a stable market to me in St. Louis. Maybe it's different where you are. If you're in Florida, if you're in Austin, Texas, perhaps you're seeing a different market altogether, one that's certainly not stable in a different way. It says, we view the forces that have reduced affordability, created a lock-in effect for homeowners, and limited housing activity will remain in place throughout our forecast horizon. So they're up into 2026. So then it gives a little bit of a, here's what happened historically. It says buyers flooded the housing market in 2020 and 2021 during the flu to take advantage of low mortgage rates, causing a spike in sales. Now, I don't believe that. At least that's not what I dealt with when I was in St. Louis. I had multiple offers as early as 2018. So I don't agree with this idea that it was that one particular flu. I think that it was much worse than that, at least here in St. Louis. Now, maybe other places it was different. And also, taking advantage of mortgage rates. Let's not forget the PPE loans that were not really loans. If we ever do take a look at that, I think you'll see that there's quite a bit of fraud that was committed. But I'm quite positive that since we haven't done anything about it so far, or we've only found the most egregious of those violations, I don't think we're going to go back and look. I think we're going to pretend like this didn't happen. So it's going to be interesting. It says, then inflation pushed interest rates in 2022 to 8%, the highest level in the United States since the early 1980s. And I would just say, there was inflation without the rates being inflated, okay? For instance, if I go with my buyers and there's a $400,000 house, okay, and people are willing to pay $560,000 for the same house during the flu, okay, because rates are lower, that is inflationary as it is. And it's done on a massive scale. Anyway, it says increased rates and a lock-in effect or lack of home transactions will likely continue to fuel a decline in home sales, blocking young buyers from the market, the Bank of America said. Now, look, I think that's reasonable. And I say that because when I'm out showing houses at this current time, most of the people that have houses for sale, the vast majority are those who are maybe what we would call like life decisions towards the end of the life, maybe an estate type thing. So many of those, so many people downsizing into retirement homes and things of that nature. So what I would say, like the inventory is not great from what I see. It says, the economists said they predict home prices will rise about 4.5% in 2024 and 5% in 2025, then fall back to 0.5 in 2026 due to the fleeting flu-driven market boost. So if you believe this narrative, which I don't, then you're like, oh, great, well, I'll just wait until 2026. But you know what? Your life goes on. You know, if you're starting a family, okay, if you're having more children and your house is too small, you're not waiting till 2026. If you get a new job and you live in a house that's a dump, you're probably not waiting till 2026. You're probably trying to get out of there. So I don't believe that. But also, this assumes that house prices are going to rise by 4.5% and 5% in 2 years, which is, in my math, is 9.5%. Houses across the board being 9.5% more expensive than they are now makes it very, very difficult for millennials, young people, to be able to afford a home. Just ridiculous, by the way, just ridiculous. The economic damage that's been done by the politicians is just breathtaking. It says with 30-year mortgage rates still hovering near 7%, the lock-in effect could take 6 to 8 years to go away. The wide gap between current mortgage rates and effective mortgage rates means most homeowners are unwilling to move unless forced. But that's true. I'll say that's true because obviously if you've got a 5% mortgage from 2020, or like say from 2010, you're probably not wanting to move right now. It doesn't make any sense. It says, moreover, we do not expect current mortgage rates to fall much, even if the Fed cuts as we anticipate. We do not expect current mortgage rates to fall much, even if the Fed cuts as we anticipate. So that's interesting. Why are they still up at 7% mortgage if the Fed cuts rates? Interesting. So it says, the Bank of America did provide some hope for the market, saying more about home sales, meaning a bad market basically for sellers, improving credit conditions and a less restrictive monetary policy should draw some buyers to the market. Well, that doesn't matter if there's no sellers. And then we go, millennials should also provide structural housing demand. However, affordability will remain an issue, and our macroeconomic outlook assumes growth decelerates and labor markets cool further. So now these millennials may not have a job to be able to afford a house. That's great. I'm sure they're going to like that. I'm sure they're going to be pleased with the economic situation. I have some questions, as I normally do. Let's go over them now. First question, how have pandemic-driven housing demand and low mortgage rates contributed to the housing market lock-in effect? Well, we discussed this, okay? I said pandemic. I should have said the flu. Now my video is going to be downranked on YouTube. But there's other places. There's Rumble, and there's Twitter, X. I'm posting there now. The idea is that someone bought a house at a 5% mortgage, and it was a 3-bedroom home, and to buy the same home right now with 7% mortgage would be like twice as expensive as what they would have paid for their original house, and they don't want to do it. That's the lock-in effect. What are the long-term implications for younger generations trying to buy their first home amid high mortgage rates and limited housing activity? Well, there's a very interesting issue here. I see it all the time online. The boomer. We hate the boomer for what they've done. The boomer didn't do anything. The boomer just went along, okay? It's the politicians that have absolutely destroyed the economy. And for those young people, they seem to, many of them, have a view of the world that is not helpful economically in this situation. Some of the demands made are not helpful in affordable housing. And I'll just leave it at that. It says, what strategies can potential home buyers use to navigate the current market conditions and overcome affordability challenges? Well, you need to save money for a good down payment, right? You need to have a good income to be able to afford a home, right? If you need to buy a home, you buy a home. You don't really worry about this garbage with, oh, it's expensive now, you wait longer, it'll be cheaper and everything. Just like if you're going to live somewhere for a while, if you're going to put down roots, buy a house, wait 10 years, you'll be fine. That's the way it is. They say like date the rate and all that stuff. Don't even worry about that. Just what you can afford right now, and down the road, you will get more answers. Time solves all problems. How might interest rates and economic policies impact the housing market lock-in effect in future home sales? Well, I'm thinking things aren't going to go well at some point in time. I don't know how those things will end up looking. What I mean by that is like during the mortgage crisis of 2018, I didn't expect the thing, or in 2018, 2007, 2008, I apologize. I didn't expect those things that happened to happen in the way they did. Like I didn't expect to see like major mortgage companies just going out of business. And I did think that there were going to be new entrants into the space. And I also didn't think that the policies afterwards, after we looked at the carnage, would actually cause the same thing to happen many, many years later. Now you may say that that's not true. It's not going to happen. House prices are always going to be expensive. Whatever you want to say, that's fine. I'll go back to my original point, which is, hey, if you want to buy a house right now, buy a house. Don't worry about all this stuff. As long as you're planning to live there for a long time, you should be fine. Things should be fine. Then if you're planning on moving next month, that's going to be a problem. But that would have always been a problem. What role do millennials play in the structural demand for housing, and how can they adapt to current market conditions? Well, if you're a younger person, I feel bad. I feel bad for you. I think that we needed to have wages outpace inflation for you to have any sort of chance of being able to afford a decent house that you owned. And what I see mostly with millennials, and I'm going to put this out there, and it's not as an insult, okay? Millennials are people too, right? Millennials, there's nothing wrong structurally with a person because of when they were born, right? And they're making do with what they have. And this is a problem that I see, and this is something that makes me uncomfortable, is rather than looking forward to owning a home, rather than looking forward to a nice nest egg in retirement, they don't see the world that way. I don't want to characterize everybody, but I'm just saying many don't see the world that way. They see a you only live once mentality. If you can, you know, and they've grown up with short-term rentals. So if they go on a vacation, okay, they pool in all their funds and they go get a freaking mansion, and they get like 10 people in there and they split the cost. They think nothing of a rental where they also just become roommates, and that's the way it's going to be. It's sad. It's sad. It's sad because they don't have that chance to take part in home ownership, it's going to create issues down the road, in my opinion. But that's my thought. You know, I would like to know what yours are. Put a comment in the comment section below wherever you watch. I know Rumble has a lot of spam. I really enjoy that. YouTube not as much, but then again, YouTube doesn't show my videos very often because they're boring, I guess. Anyway, with that, I'm going to head on out. Thank you very much for watching tonight. I will see you down the road. Later.